What is up, you guys? Nick here. If you're new, welcome. If you're returning, welcome back. In today's video, I want to give an update on one of my favorite electric vehicle companies, Xpeng. As we move into December, November deliveries will be released in the early days. And if we as investors have learned one thing about these delivery releases, it's that there is a ton of share movement and volatility. Xpeng has recently taken a sharp share price lead amongst other similar electric vehicle competitors, ending the trading week at 64.28, gaining over 32% over the course of the previous 5 trading periods. In this video, I want to go over why this is, discuss whether there is more room for short-term growth, and give a 2021 share price prediction and what you can expect from this company moving forward. But first, I have recently partnered with Webull. Open up an account, deposit at least $100, and you'll receive 4 free stocks worth up to $1,700. This is a no-brainer. They are an amazing trading platform with 0% commissions and some of the best analytics in the game in my opinion. This offer ends soon, so don't sleep on it. Hit that subscribe button if you haven't already. I cover innovative, disruptor, high-growth companies. I first told my subscribers to purchase Xpeng at $19 a share. You don't want to miss any of my future picks. And without further ado, let's get right into it. Alright, to give a quick Xpeng overview, they are a Chinese electric vehicle company with currently 2 beautiful vehicles on the market, the larger smart SUV, the G3, and the smaller P7 sedan. Now, there are 3 main factors that set this company apart from other Chinese electric vehicle companies. 1. They are dominating the smart driving and autonomous driving technology sphere. They are expected to be the first Chinese electric vehicle company to achieve level 4 autonomy or mind-off driving, where you can essentially pay little to no attention and safely get where you're going. Xpeng sees autonomous driving as a major factor, enabling them to gobble up market share, and continues to pour cash into research and development to expedite L4 autonomous driving technology. More than 40% of Xpeng's entire workforce is focused specifically on advancing their technologies and research and development as of June 30th, 2020. As you may be aware, China is the leader in terms of autonomous driving and electric vehicles in general, and Xpeng, being well aware of this, is leading the charge, that's a pun, and sees it as a crucial advantage that sets them apart from the rest of the pack. They're specifically focusing on full-stack autonomous tech, in-car intelligence operating systems, and core vehicle systems through proprietary software and data technology. 2. They are setting off to become completely vertically integrated. Unlike other Chinese electric vehicle companies, Xpeng actually owns its own mega factory, the Xpeng plant, where they design and build their own vehicles. This factory is state-of-the-art, and they are currently building another mega factory that will begin mass production in late 2022. Xpeng is a self-owned plant enabling up to 100,000 units of annual capacity. They also have a contract with Hema plant that enables up to 150,000 units of annual capacity. Together, this amounts to a capacity of 250,000 250,000 units per year, or 20,800 units per month, which is definitely enough capacity ceiling for the time being. Xpeng just delivered 3,040 vehicles in October, representing a 229% increase year over year. This really is incredible growth. The fact that even with this 250,000 unit cap, they're currently building another mega factory really is crucial for me, as it shows their intense belief in their own capabilities and are forecasting vast quantities of deliveries in the coming years. They are also remaining well in front of demand as to not run into supply chain issues. This is also critical in that although they are running deeper into the red by not outsourcing production, they stand to increasingly benefit as their delivery numbers continue to rise. This will likely improve their gross margin faster than companies who outsource production. 3. Their vehicles are targeted at a mid-end segment in China's passenger vehicle market. This is extremely critical in that unlike many other electric vehicle companies that are specifically targeted to high-end segments, Xpeng stands to greatly benefit from a wider ranging market. Although there is much more competition within this cohort and it is quite saturated, Xpeng has clearly carved out a nice niche for themselves by A, being electric, B, being affordable, C, having futuristic, sleek, and optimized vehicles, and D, focusing on full-stack autonomous technologies. As the economic future is quite uncertain at this point in time, discretionary spending is forecasted to decrease in the coming quarters, and vehicle companies positioned on affordability stand to benefit. Another thing I really like about Xpeng is that their vehicles are breaking national records on a continual basis. Xpeng P7 has the longest any DC range throughout all of China at 706 kilometers. Together with their 114 supercharging stations, this is greatly reducing mileage anxiety, which is stated as being one of the largest deterrents from consumers purchasing electric vehicles. I really do think that the share price is currently justified considering the rapid rate of growth and the fact that they are moving towards complete vertical integration. China's Golden Week holiday deleteriously impacted delivery capacity in the early days of October, and analysts are expecting huge increases in their month-over-month growth for November and heading into December. There is typically a bulging of auto sales in mainland China in the later months of the year, November and December historically. Investors are finding comfort and reliability in Xpeng in that they are striving to become 100% vertically integrated. This is crucial in that they make and produce their own vehicles and can more appropriately and accurately control supply in accordance to demand without having binding contracts with outsourcing companies. They are also forecasting vast growth and are clearly demonstrating their commitment to rapidly growing and expanding by constructing an additional mega factory poised to open in 2022. Being targeted to the mid-class market while making beautiful and sleek, fully electric vehicles stands to greatly benefit this company and their bottom line. Having less expensive vehicles than other companies does, however, come at somewhat of a cost, as their margins are tighter than some competitors. Because of this, and because they don't specifically have luxury vehicles, Xpeng is forced to win by sheer numbers of deliveries and are showing intense promise by rapidly increasing their delivery figures month after month. Xpeng currently has a market cap of 46.265 billion. This is incredible as they are such a young company. They are now more than $10 down from their all-time high of $74.49, which may make it the perfect buying opportunity. They had an absolutely massive third quarter's earnings, almost quadrupling their revenue up to 1.99 billion. However, they did indeed go deeper into the red in terms of earnings, losing 1.15 billion. This was expected though, as their margins are weak as of right now. However, with increasing margins in the coming quarters and increasing deliveries, investors can expect these earnings to improve, and I would not be surprised if this was indeed a bottoming out or near it. They are currently sitting at a 1.7 in between a strong buy and a buy. There is a price prediction consensus of nearing $200 a share by the end of 2021, more than a 200% gain on current share prices, specifically at 187.495 with a bullish outlook of 197.885. There is so much promise in this company, and I really do love the fact that they have a sedan on the roster that is ever increasing deliveries and simultaneously dropping in price and so affordable. They are leading the race in L4 autonomous driving. They are rapidly growing with a 250,000 vehicle annual capacity currently. Their margins are expected to continue improving in the future quarters. They are situated in the affordability market, and with the increased movement of consumers turning towards electric, they are extremely well poised for the coming landscape. If the share price can fall back down to around the $60 support line, I will indeed be purchasing a bulk quantity of shares, as with their upcoming November deliveries, I would not be surprised to see their share price receive a steep surge. I do believe that if Xpeng is able to output a November delivery quantity around the 3,600 mark, that their shares will dramatically increase back up to all-time highs, which may be acting as a short-term resistance line. I will be keeping a very close eye on this company in the coming days, and I have some really interesting videos in the pipeline, so make sure you hit that subscribe button. You don't want to miss out on any of those updates. Smash the like button for the YouTube algorithm, I'd really appreciate it. Lastly, don't forget to open up a Webull account, deposit $100, and receive 4 free stocks worth up to $1,700. This is an amazing deal, guys. I don't put out anything that I don't genuinely think is fantastic, and I really do use Webull's analytics every single trading day. They're 0% commission based and very user friendly. The promo ends in just a few days, so don't sleep on it. Anyways, thanks so much for watching. I really do appreciate it, guys. See you all in the next video. Cheers.